Welcome to Bears in Exile. Today is January 11th, and this is the quick hit on the indexes. Alright, so today, very small day up, Friday, and I have been bullish all through this, thinking that the markets would continue to trek on up, and they have. And we're actually in a pretty darn good spot. We had the downtick over here. We were saying on the Dow, SPX, etc., that we wanted to see it so that a downtick would bring it into the this recent high and be able to do a bubble corrective move and then still move up. We did have that in TNA. We did have that in, I think it was the NASDAQ. We almost had it in SPX, and we did not have it in the Dow. And as of today, we almost have it for the Dow. Not quite there, but pretty darn close. And anyways, what else do we have? We have a very small hanging man, which should not mean too much. It's not a powerful looking hanging man, but it's there. We are inching in on the major price consensus level for the month of November. We are inching closer towards the previous highs, all of which should have some kind of interaction with the chart. We are in a topping area once again in the heat map, and here's the really bad thing. The 14-day RSI moving average is moving down. So unless it's able to turn back up, the bull's time in the sun is going to be drawing to a close. We do have the stochastics moving up. We do have the CCI barely going up. With the RSI going down slightly, we still have the MACD histogram going up and the MACD going up. We have negative divergence in the MACD histogram. We have negative divergences in the RSI. We have negative divergences in the CCI. So, time is running out. And I still think that this should at least attempt to get to the major price consensus level or a previous high before running into some serious problems. Maybe Monday it can start to turn already, but there's not enough development here to say that the turn is underway yet. It just says that it is very close. So I think that by midweek, this is going to be done. What would I expect after that? Well, if we're able to go up higher in price while the indicators go down, there's a good chance that we'll be high enough for a bubble corrective move to take us down to this previous high and bounce off of it. That's what I'm thinking at this moment. And that would take us to 13,365, which by the time that gets underway, maybe we're up here at 13.5, 13.6, and we'd be looking at a couple hundred points to the downside. That would feel major to a lot of people, enough to get people to go short in a decent way, and then put the screws to them. So anyways, that's my chain of thought at the moment, but the daily is becoming bearish in a real manner. Moving on to SPX. And you can see here with SPX, if we were to get a downtick today, it would not even reach the top of this previous high. That is a healthy thing for the bulls. A really lackluster day for the bulls, but we do not have, just like the Dow, firm confluence of that the down move is underway already. It is more developed than the Dow. We do have a downtick on the MACD histogram. We do have the 14-day RSI moving average going down. We have the CCI and the RSI ticking down. But until that MACD turns and the stochastics turn, I'm going to give the bulls a wide berth. I think that's a smart thing to do. And everyone is talking about 1500, 1500, 1500. Maybe we get to that point. Maybe not. Maybe we crap out ahead of time. But it would seem likely to me that it will at least attempt to hit it or to get close to it before it turns. And to what extent, I don't know. Going to COMPQ, the NASDAQ, also a lackluster day. And this one does not have as much development as SPX does. We had the CCI going sideways. We barely have a tick down on the MACD histogram. So this one definitely also looks to be more bearish than bullish. We do have the down tick corrective move above the previous high, also a good sign. So the bulls don't have too much to worry about at this point, I don't believe. If we're going to get a bubble corrective move and it breaks the previous high, then trouble. But until we see more evidence that that will be the case, I will give the bulls a wide berth. Today closing above the major price consensus level from October. So I do want to give them the benefit of the doubt until it is very, very clear. And going on to TNA to round out this short video, the Russell, which has been just a monster, absolute monster. You know, no downtick. It's just a doji at a near a top. It's not even at a top. And we don't have the stochastic still pointing up. We still have the MACD pointing up. Everything else is pointing down. We do have a nice slope on the MACD histogram. We do have the negative divergence. So yeah, this one is worse than many of the other indexes, but this one has just been so darn strong. Not even pulling back when on those other days that the down SPX were. So this one's going to fall, I would think, a lot more when it finally is time for it to fall. But until that moment, it's going to be stronger, continue to be stronger, I should say. So wide berth, but running out of time. It's very close, very close. And this one, if we get a downtick as of today, it would go down to 68. But I mean, yeah, it could easily go down to the previous high, or maybe even gap fill, which would be 64. If we can catch that early enough, that'll be a huge move. And it's probably the one that I'll be looking for to play. But at this moment, no way. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.